earnings and the reactions to those earnings. Sasken Technology's net profit expanded 50% in the quarter gone by. Companies also approved a buyback to the tune of 170 odd crores. The stock's up about 5 odd percent because the buyback price is at 850. That's a 15% premium to the current market price. I caught up with the chairman and the MD of the company, Mr. Rajiv Mody. Hear him out.
On a sequential basis, we had about 11.6% growth. And this also, by the way, included, I wouldn't call it a one-time because this was pending and we had announced that to the market on some negotiations we had on some of the cost overruns on fixed price programs, which came through, and the revenue because of that got recognized. Part of the revenue of that got recognized in Q4. So overall, satisfactory quarter, 5.3% year-on-year growth, and there was an improvement in EBITDA too. I think overall for the quarter it was 18%. Without the one-time thing, one can look at EBITDA at about 14%. And overall for the full year also, the EBITDA ended at 14%. So overall, a few things worked well. Of course, we have made good progress in penetrating the accounts, newer accounts, which are marquee logos. We started engaging with them. These are specifically in the automotive sector as well as industrial and the operator segment. So we see good traction, and our intent is to see how we can take our growth further from where we are. Having said that, one of our large customers has announced that they have signaled an exit on the 5G modem space. We have engagements going with them. While we are not saying there is going to be an impact, we are waiting for us to get a perspective on the same too.
Is this a big opportunity for you, sir? I mean, and you have been proactively making investments to capitalize once 5G comes into play in a big way.
Yeah, so we are definitely looking at it as an opportunity to see how we can really make a difference over here. Absolutely. However, in any short term, if there's an impact, then we have to factor that, which we are currently saying that we don't have any news, any clarity on that, but we are watching it.
Your margins have also come in way stronger this quarter onwards. You've got 16.7% as your margins. Is that maintainable according to you, or this is due to that one-off that you spoke about?
No, we don't believe, because this year we are investing heavily in creating a talent pool. Just to give perspective, we are a very high-tech company, not the typical traditional IT space. We are into product engineering, where we are doing work on leading-edge products for our customers. One example is 5G that we talked about. And for that, we need to have talent pool of a certain type, and we take about 4 to 6 months for us to train them in specific areas. So we are looking at how do we increase that, because of which we're going to have an impact on the EBITDA, but we're going to do a balancing act over there to make sure that we do deliver reasonably good EBITDA margins, along with the focus that we have as far as our business is concerned.
In fact, I wanted to actually come to that question, because the street over the last few quarters has been a bit concerned regarding the attrition levels. Do you think that that's going to be a problem area? And how much, since you mentioned there is going to be an effect on the margins, how much would you anticipate that to be?
See, we are in a space which is attractive for large MNCs, so we do lose our people to MNCs in a big way. However, having said that, our focus is to see how we can make sure our people are engaged, and the focus is going to be on reining in the attrition in the current fiscal.
So sometime back you'd placed a very lofty US revenue target for yourself. Do you see yourself inching towards meeting that goal, and what would you say would be the CAGR growth rate till FY 21-22?
I don't think we give guidance. Though that's an aspirational goal that we set for ourselves. We do continue to monitor and see how we can achieve that aspirational goal. So I wouldn't hazard a guess, to be frank with you, on the CAGR for 2021-22.
All right. So let's talk about various segments and the performance thereof. So automotive segment for one, that's been the prime mover of growth for you up until now. What's the outlook there and what is the growth potential?
I think the automotive sector is going through a transition. Newer technologies are coming in a major way. And that's where we are focused on. And that's where we see a great opportunity for us to scale. So this is what our stated objective is in the automotive. I don't need to go into the details of what are the areas because, frankly, all of us are reading about the autonomous driving, the in-vehicle infotainment systems, which are going to be very different from what we are used to today. Third thing, all the services that are getting enabled in a vehicle. All of those areas are something that we are kind of touching in one way or the other. And that's what our goal, our objective is with regards to that segment. And we are confident of the progress that we'll make in that.
But have you seen a client spending in this particular segment?
It is there.
All right. Versus the other segments? If there
Other segments also, we are, say, Industry 4.0, again, growth area. Semicon again growth area, and lastly the devices and satellite is also we are seeing good. Satellite, by the way, takes longer for us too because the business is not as, but we are clear leaders, at least out of India, for us to be able to deliver value to our customers.
All right. And you've announced a buyback of about 170 odd crores. Post buyback, what would that leave you with in terms of cash and cash equivalents?
Today we have about 505 crores of cash. After buyback, it would leave around 340 crores of cash. As far as this, I'm giving you numbers as of 31st March.
All right. This includes investments, right? Because otherwise, your pure cash and cash equivalents is somewhere closer to 100 odd crores.
No, equivalent, basically the cash that you would have invested in, parked in reasonable risk-free returns.
Okay, which can be dilutable, for the buyback.
Exactly, absolutely.
All right. Just one last question, Mr. Rajiv, before we let you go, in terms of the biggest growth driver that you see for yourself as we step into 2020.
I think primarily automotive is the big growth area for us going forward. The devices segment also is promising, so we are focusing on that along with the digital side of the things. We have, as you know, a digital practice, and we are making good progress over there. So that also, honestly, is a big growth driver for us.
Any big orders anticipated by you?
Well, I wouldn't want to comment specifically on that.